5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. My name is Jerry Robinson, as you just heard, an economist, a trend trader, an investor, a Christian. Not the evangelical type that you see on TV constantly being paraded and made fun of. I don't actually have any political gods at all. I don't bow to political gods, kind of a political atheist, if you will. But I do believe the Bible. Great to have you here, guys. Wonderful to have you here. Today we're going to be talking about something interesting. Are you prepared for the next market meltdown? That's the name of today's podcast. Very excited to talk about this. And it's a topic that is, well, I guess near and dear to my heart. I wrote a book called Bankruptcy of Our Nation, and it came out back in 2008, 2009. Many of you have read the book. All of our members get a complimentary copy whenever they sign up as a member here at Follow the Money. And it's been something that really kind of states my thesis on where things are heading, economically speaking. Now, since my book, Bankruptcy of Our Nation, came out in 2009, where I described the insidious debt-based nature of America's economy and its debt-based currency, there has been one question that I've been repeatedly asked by reporters, interviewers, and even our own members. And that question is simply this: when will the next major market meltdown begin? And of course, as everyone knows, that's an impossible question to answer unless you have a crystal ball. And mine's broken, so we can't peer into the crystal ball to find out when these things will happen. Now, as a trend trader, I follow the message of the market. And the way I find the message of the market is I look at the price and the volume on a chart. And that's something that we teach all of our members here. It's a wonderful skill to be able to look at a chart and to be able to understand what you're looking at. Now, here's what I do know. I do know that the United States stock market will crater, and that America's preeminent position as the world's leading economic power will eventually come to an end. Now, when will that happen? That's the big question. Well, no one can tell you. And in fact, one of the greatest Wall Street titans of the 20th century, Bernard Baruch, answered this question this way. He said, don't try to buy at the bottom. Don't try to sell at the top. It can't be done except by liars. And I think it's a very apt way to put it. There's really no way to tell, when you're at the extreme bottom, or there's no way to tell when you're at the extreme top. There might be clues that you can pick up on. But apart from insider trading, there's really no way to know, what the market's going to do tomorrow, let alone next week or next month or next year. And I know that's not a very satisfying answer for many people, because as they watch this rip-roaring uptrend in stocks since 2009, we're seeing signs pointing to the fact that the financial markets are getting really frothy. I mean, they're wildly overvalued. There's no doubt about it. And obviously this makes investors nervous, which was not helped by the fact that the federal government just recently shut down and then reopened 3 days later. In fact, the state-run Chinese press even took the opportunity to ridicule Washington during the recent shutdown of the federal government, pointing out what they called the chronic flaws in America's democratic process. Here I have an article entitled from the Chinese state press. I have a link to it in today's show notes. Government shutdown exposes chronic flaw in U.S. political system. It's a very damning headline. Here's a quote from the article written by the Chinese state press. The Western democratic system is hailed by the developed world as near perfect and the most superior political system to run a country. However, what's happening in the United States today will make more people worldwide reflect on the viability and legitimacy of such a chaotic political system, unquote. Now, the timing of this rebuke by China comes just a couple of weeks after another very concerning headline that came out on January 10th by Bloomberg, and that headline was entitled, "China Weighs Slowing or Halting Purchases of U.S. Treasuries." Now, that's not the kind of headline you want to wake up to if you're a bond investor, right? Or if you're just invested in the U.S. financial markets. Now, China owns the largest amount of foreign exchange reserves, which is a fancy way of saying foreign debt and currency holdings. But do you know how much foreign debt and currency China actually owns? And I'm not talking about how much of their own currency they own. I'm talking about how much they own of other currencies around the world, aside from their own. Let's get that drum roll, please. What's that number? $3.1 trillion. That's with a T. So that $3.1 trillion that China has invested in other nations' debt and other nations' currencies. And of that $3.1 trillion, a full $1.2 trillion is invested in U.S. denominated debt. So just imagine for a minute, you're listening out there wherever you are around the world today, listening to this podcast. Imagine you sit in the seat of the China portfolio managers that manage this vast portfolio of $3.1 trillion. Do you think you would do any kind of research before you put your money out? I mean, you would think you would do some regular due diligence on all of your holdings, right? Well, Chinese government officials in charge of the portfolio are apparently beginning to question the wisdom of purchasing U.S. bonds. Here's that article from Bloomberg. Again, here's a quote. "Senior government officials in Beijing reviewing the nation's foreign exchange holdings have recommended slowing or halting purchases of U.S. treasuries, according to people familiar with the matter." Now, that last phrase, the people familiar with the matter, is another way of saying that this is an information leak. Whether this information is accurate, we can't know, but certainly it's been leaked. But one thing we can do is we can look at China's purchase history of U.S. treasuries. And when we look at the purchase history of China's buying of U.S. debt, we see a slow but steady increase in their purchases over the last several years. And so considering that the U.S. has a massive $600 billion annual trade deficit with China, this all makes sense. I mean, of course, China has a vested interest in seeing that the United States is able to continue to pay for Chinese goods. And so therefore, the United States is always limping around when it deals with China because they're constantly having to borrow to do what? To buy stuff from China. So who do they borrow from? They borrow from China. So China has a vested interest in loaning us money because we just turn right back around and give it back to them, right? Makes total sense. It's the same thing, same reason the bank gives you money, right? He gives you money because he knows you're going to turn right back around and have to pay him back with interest. So, you know, as we look at this game of musical chairs, we don't know how long it can continue, but we do know that many people are living in denial about America's perpetual debt binge right here in America. But even China's creditors apparently have their limits. As you can imagine, all of this talk about China possibly ceasing or halting or slowing down their purchases of U.S. debt and thus slowing down the financing of our consumption, that has a lot of bond investors a little bit worried. Learning that one of the world's primary purchasers of U.S. debt may be getting buyer's remorse is not welcome news at this stage of a wildly bloated U.S. bond market and, for that matter, U.S. stock market, but especially the bond market. I mean, you got to remember the U.S. bond market, especially U.S. government bonds, have been in a massive uptrend for practically 3 decades. So naturally, there's a lot of nervousness in the room for bond investors. But you take all the political incompetence in Washington, you move it to the side, there are still, believe it or not, there are still plenty of upside catalysts that could push the stock market higher in the near term. Not so confident of the bond market, but I think you could see the stock market continue to rise in the near term. Now, some of these catalysts for 2018 include a stabilized labor market. We have rising consumer spending, whether that's good or not. It's up, how it all depends how you view it. There are positive Q1 earnings expectations for many companies, massive corporate tax cuts that have been given to corporations through the new GOP tax bill, and that's going to translate into bottom line growth for many of these companies across the board. In addition, there is growing evidence that the Federal Reserve will continue easing liquidity requirements for banks. There was just a story put out in the Wall Street Journal just recently how the Federal Reserve is calling for easing liquidity requirements for banks, and that's ultimately going to translate into easing lending standards. Now, while China spends time chasing its own tail and basking in its own dysfunctional corruption, China is busy building out its ambitious Belt and Road Initiative, which aims to connect Western China to the Eastern Mediterranean, thus reviving the ancient trade route known as the Silk Road. The longer I invest and the more I learn about the world and the more I learn about history, the more bullish I become on the continuing rise of Asia. While China is no stranger to empire, having been the largest aggregate economy for most of world history, its recent rise comes after a relatively prolonged period of economic contraction underneath the failures of former Chairman Mao's poor fiscal and monetary policies. But the rise of China that we see today is coming amid the demise of the United States. Now, some people will point to recent tax cuts as proof that the American economy is truly on the mend, but they fail to mention that America is leveraged to the hilt with no escape plan. Through decades of inept and misguided policies, Washington has placed the full faith and credit of the federal government on a bullet train heading towards a brick wall. The only thing standing between the U.S. economy and a rude awakening is a four-letter word: time. T-I-M-E. How much time do we have? That I cannot tell you. Just because the day of reckoning is not here yet, though, is no reason to bury our heads in the sand and act as if the day will never come. President John F. Kennedy once quipped, "The best time to repair the roof is when the sun is shining." So, too, you and I have an opportunity to prepare our households now for the inevitable calamity that awaits a nation built entirely upon debt. So don't let the uptrends in stocks fool you into thinking that we'll never see another downtrend. You are simply living through the current manifestation of the boom-bust cycle that has affected every generation since the central planners began their monetary mischief many, many decades and even centuries ago, if we count the Bank of England as the beginning. We are currently living in the biggest uptrend stage of the boom-bust cycle, the boom, if you will. Cashing in on the boom is the smartest thing you can do right now. However, like every boom that has preceded this one, the current uptrend is going to come to an end. All uptrends eventually end. And when they do you know what the uptrend turns into? Well, if you said downtrend, you're right. So making money in an uptrend in stocks seems easy, right? You buy stocks that are rising more quickly than the broader market and you enjoy the ride. I personally like to concentrate my holdings into uptrending ETFs, including a few leveraged ETFs along with a small basket of uptrending stocks. But when the party's over and the market starts to give back its gains, and when the big money starts exiting the room, how do you profit then? How do you make money then when the uptrend is over? Can you profit then? That's the question I recently got from Craig, one of our new Gold members. Craig asks, "Jerry, I have heard you in person when you were in California a few years ago, and I have a question about profiting when the stock market stops going up. I am very new to the stock market and wanted to ask you for a simple explanation for how to do this so that I can prepare now and be ready when the next downtrend begins. Thanks, Craig from Modesto, California." Craig, that's a fantastic question. You want to know how to prepare for the next downtrend. And we have done, by the way, numerous teachings on this for our members, and we've even done several podcasts over the years about being prepared for the market collapse. Unlike a lot of our peers on the internet, though, it's not fear porn. We're not trying to get you all spooked and tell you that, it's going to crash and there's nothing you can do, so deal with it and go blame a politician for it. No, we actually have solutions. In fact, we've given out several different ideas over the years. Let me just tell you some of these basic ideas. A few ways to profit from a downtrend. Number one, you can short stocks, right? You can take a stock and you can say, I'm going to bet against this stock. I think it's too high. Now, that's risky. It comes with a whole new set of risks that buying stocks doesn't have. So we don't tend to really use the shorting stock strategy very often, but it's certainly something you could do. Secondly, you could buy put options. If you're familiar with the options market, you can buy put options on stocks or even ETFs. And this basically gives you the right but not the obligation to profit in the event of a big sell-off in that stock or the underlying ETF. There's also, number three, there's also some advanced option strategies that we're not going to get into now, but we've discussed for our members over the years. So there's many different things you can do with options. Number four, inverse ETFs. These are probably the most easiest thing for the average person to do. So let's say that you think the S&P 500 is going to go down. Well, there's an ETF for that. You can actually purchase an exchange-traded fund, a lot like a mutual fund, but it's not. It trades more like a stock. And this ETF, for example, the short S&P 500, the ticker symbol is SH. SH will go up in value when the S&P 500 stops going up, when it finally stops and begins to go down. So if you think the S&P 500 is going to go down, then you have ETFs that you can purchase that will go up when the S&P 500 goes down. Right? See, there's always a bull market somewhere. This is the point. And inverse ETFs give you that ability. And then finally, number five, my favorite way, hands down, aside from using put options, is the use of leveraged inverse ETFs. So in addition to having an inverse ETF and an inverse exchange-traded fund that goes up whenever the market goes down, a leveraged ETF actually goes up by even more. So in other words, I'll give you a couple of examples. Here are my three go-to leveraged inverse ETFs that I personally plan on buying when this current uptrend finally gives out. Let me give you three of my favorite ones here. Number one is the ProShares Ultra Pro Short NASDAQ ETF. The ticker symbol is SQQQ. Now, currently, many of the high-flying tech stocks in the NASDAQ are wildly overheated, and they're likely to suffer some major losses whenever the next downtrend begins. And they'll probably suffer those losses more quickly than the broader market. And so what I plan on doing is whenever we finally get a long-term downtrend in the NASDAQ, which has been a long time coming, when it finally comes, I'm going to be using SQQQ, which will go up when the NASDAQ is falling. And it won't just go up one-to-one. It's leverage, which means that for every 1% decrease in the NASDAQ index, my SQQQ will rise by 3%. So if it goes down by 1% on the NASDAQ, the leveraged inverse ETF SQQQ will rise by 3%. Now that's pretty darn nice, isn't it? So if you think the market is really going to crater, there are plenty of ways for you to take advantage of that. One of them that I'll be using is SQQQ. Let me give you two more before we close out this first segment. The second one is SOXS. SOXS is the ticker, and this is a short semiconductor ETF. This is actually a 3X leveraged inverse semiconductor ETF. Now, any of you who've been trading stocks or investing, looking at the tech sector, semiconductor stocks in particular have been on fire, especially since about 2016. And many stock prices are bloated beyond reason. I would expect the next market crash to hit overinflated semiconductor stocks particularly hard. After stumbling back in mid-November, semiconductor stocks recently broke out to new highs in their big uptrend. But, over time, we just don't know how far we're going to see these things go. We've actually enjoyed a massive, massive gain in the 3X semiconductor ETF, which is SOXL. That's the long version. Think of L as long and S at the end of it being short. The SOXL ETF, which is 3X long or bullish on semiconductors, has gone up over 600% over the last 19 months. So many people feel that semiconductors are due for a pullback or possibly, going to have a really sharp sell-off. And if that's the case, SOXS will be my go-to ETF to profit from the eventual tumbling of these semiconductor stock prices. And finally, number 3, I do think that many biotechnology stocks are wildly overvalued as well. It doesn't mean that I'm shorting them now. That's the difference between a trend trader and a typical trader or an investor. The typical trader or investor will begin to short stocks or ETFs in the middle of an uptrend, and that's how you lose money. That's how you lose your shirt. So as a trend trader, I'm not going to outsmart the market. I don't know when the downtrend will begin. I wait for the downtrend to begin. And when the downtrend begins, then I'll pull the trigger. Then I will want to short biotech stocks. And the way I'll short biotech stocks is with a little ETF that's extremely cheap right now, around $3 the last time I checked. It's really, really low because biotech has been going up. And this little ETF, the ticker is LAB as in boy, D as in dog, LABD. Now, the reason why I'm going to be buying this is because I think when we move into a market crash, a market collapse, even if you will, and by the way, we don't have to move into a massive collapse. There are things just as general downtrends, right? And so we might just enter a downtrend for a year. Regardless, when biotechs finally begin moving down, I think they could probably plummet quicker than other areas because sellers will be raising cash from these more speculative industries like biotech, and they'll be using them to move into safer sectors. Typically, those things are like utilities. Those safer sectors are utilities and real estate, value stocks, and some other income stocks as well. So biotechs, because of their high-flying nature, just like semiconductors, could get particularly hit. So those are the 3 that I plan on, at least not the only 3, but 3 I will be buying on the next market downtrend. SQQQ to make money from a falling NASDAQ, SOXS to make money from a falling semiconductor sector, and LABD to take advantage of a major correction or collapse in biotech stock prices. So in summary, my point is that you may be concerned about the state of economy and the current market valuations. And as I stated at the outset of this podcast, there's plenty of reasons to be concerned. But you should also know that there are ways that you can profit from any decline that may lie ahead. Don't sit around consuming fear-based news headlines without a plan to protect yourself and your family. If you don't have a plan, let today's podcast be a subtle reminder that you don't have to be a victim of the next economic collapse, whenever that may happen. Instead, you can empower yourself through education and right thinking about our current situation. If you need help getting started, consider becoming a member of Follow the Money. Just go to followthemoney.com. When the eventual collapse comes, our members won't be sitting around pointing fingers at their political opponents and be complaining about a declining market. Instead, they will be alerted when the market finally forms a new long-term downtrend, and that will enable them to get out of the market. Some will use our alerts to sidestep the next market crash, while many others will profit from the decline through the use of many powerful bear market strategies that we teach our members. Now, it's your move. Hello, friends. Jerry Robinson here from Follow the Money Radio. Are you wanting to cash in on the next Bitcoin? You feel like you missed out on the big cryptocurrency run? Well, I've been investing in cryptocurrencies for many years. In fact, I got started back in 2013 when we talked about it right here on this program about how you could begin investing in things like Bitcoin. We also began investing in Ripple, which has recently had some amazing gains, returning over 35,000% in 2017 alone. I believe that out of the 1,000 or plus 1,000 different cryptocurrencies that are available for you to invest in, most are destined to fail. But there are going to be winners, and those winners have the potential to generate life-changing profits. For that reason, I put together our 2018 cryptocurrency tracker portfolio. It's our top 10 cryptocurrency investment picks for the year of 2018. This report includes all 10 cryptocurrencies, along with the exchanges that you can buy them on, and even videos to help you learn how to actually go about purchasing cryptocurrencies for the very first time. We also include quarterly commentaries that will come out to you by email, and also real-time email alerts in the event that we make a change to the portfolio. Set yourself up for success by getting started right now with the newly released 2018 Crypto Tracker Portfolio and real-time alerts. You can get all the details by going to our website at followthemoney.com/crypto 2018. That's followthemoney.com/crypto 2018.